Hello traders, welcome to my channel. We have started Forex price action trading course on your demand. In this video I will teach you about support and resistance. Among all the aspects of technical analysis, perhaps the most important concept is support and resistance. Many other aspects of technical analysis are based on these concepts. Hence, before proceeding further, we first need to understand this concept thoroughly. Support and resistance are the important price points on the chart of any security at which the security is expected to attract the maximum amount of buying or selling. They are the points where there is a maximum probability of a pause or a reversal of a prevailing trend. The logic behind them is demand and supply. The price of any financial asset or security is driven due to the law of demand and supply. When the demand, buyers, is more than the supply, sellers, price of a security increases, and when the supply, sellers, is more than the demand, buyers, price of a security decreases. The age-old saying of buy low and sell high is the only thing that is required to make money in any financial market: stocks, commodities, currencies, cryptocurrencies, etc. This is precisely where support and resistance come into the picture. For this, one has to either buy at support and later on sell at resistance, or sell at resistance and buy back later at support. Most of the financial market traders use the concept of support and resistance as an important factor while trading in the market, be it scalping, day trading, swing trading, or positional trading. What is support? As the term suggests, it is the level at which the price of a security does not fall further, as the demand is sufficient enough to hold the price from falling further. As explained earlier, when supply is more than demand, the price of a security decreases. Now, as price reaches near the support level, more and more buyers get keen to buy the security, whereby demand becomes more than supply, and hence price stops from falling further and starts rising. Support will always appear or form below the current market price of a security. Support can either be in form of a single price level or at zone. This point shall be clear when you look at examples ahead in this chapter. Support level or zone ultimately gives us the reference point where the most repetitive buying, demand, has happened in the past, and is likely to happen again in the future. It is an important technical level from market participants' point of view. How to plot support level or zone? The following steps are to be followed to correctly plot the support level or zone. 1. Look at the historical price data. 2. Identify extreme lows. 3. Mark all the low touch points. 4. Connect all the touch point. 1. Look at the historical price data. The first thing you need to do is to look at the past price data of a security whose support level you want to find. You can either use a candlestick chart or an OHLC bar chart for this process. Never use a line chart, as it does not take into account open, high and low prices of a trading day. I always prefer using candlestick charts, as they are the simplest of all forms of chart and provide all the necessary information. To identify extreme lows, try to find extreme lows, i.e., price points, or zones, from where price of a security turns in an upward direction more often. Here, price point refers to a particular point from where there has been a sharp reversal in price, whereas the price zone refers to a zone in which a price gets stuck after a brief down move. 3. Mark all the low touch points. When you are done identifying the extreme lows for support level, then you have to mark or encircle these levels so that they become more visible and easy to understand. Try to find at least 3 or more such points. 4. Connect all the touch point. Once you are done marking all the touch points, next step is to connect all those touch points. Now, depending on the price action and time period of the data, these touch points will get connected through one or more horizontal lines or through one or more horizontal rectangular zones, such that you either get a single support level or multiple support levels. Let's take some examples of single support levels or multiple support levels and single support zone or multiple support zones. Chart below shows a single support level drawn on the daily time frame chart of gold using historical data. Chart on the next slide shows multiple support levels drawn on the daily chart of gold using historical data. Chart on the next slide shows single support zone drawn on the daily chart of a UDNZD using historical data. Chart on the next slide shows multiple support zone drawn on the daily chart of a UDNZD using historical data. What is resistance? As the term suggests, it is the level at which the price of a security does not rise further, as the supply is sufficient enough to hold the price from rising further. As explained earlier, when demand is more than supply, the price of a security increases. Now, as the price reaches near the resistance level, more and more sellers get keen to sell the security, whereby supply becomes more than demand, and hence price stops from rising further and starts falling. Resistance will always appear or form above the current market price of a security. Resistance can either be in form of a single price level or a zone. This point shall be clear when you look at examples ahead. In this video, resistance level or zone ultimately gives us the reference point where the most repetitive selling, supply, has happened in the past and is likely to happen again in the future. It is an important technical level from market participants' point of view. How to plot resistance level or zone. The following steps are to be followed to correctly plot the resistance level or zone. 1. Look at the historical price data. 2. Identify extreme highs. 3. Mark all the high touch points. 4. Connect all the touch point. The process followed in plotting resistance level or zone is similar to that followed in case of plotting support level or zone, with the only difference being instead of identifying and connecting extreme lows, here our focus is on extreme highs. Now I will show you some examples of single resistance level, multiple resistance levels, and resistance zone or multiple resistance zones. Chart on this slide shows a single resistance level drawn on the daily chart of JPY/USD using historical data. Chart on the next slide shows multiple resistance levels drawn on the daily chart of JPY/USD using historical data. This is the chart of crude oil, shows a single resistance zone drawn on the daily chart. This is the example of multiple resistance zones drawn on the same chart in daily time frame. Important point to remember: support and resistance are just reference points used for buying and selling securities. However, in trading they should be used along with other things like candlestick pattern, chart patterns, etc. to get better confirmation. So guys, I hope you like this video which was about support and resistance. In our next episode we will talk about support and resistance reversal. See you on our next episode.